Right, welcome back. Second half of our program includes a fascinating panel discussion. We've got 6 panelists who represent very diverse industries, backgrounds, experiences, even perspectives in how they view blockchain and related technologies. I will hand the panel will be led by our moderator, Dr. David Krause. And they will discuss where the puck is moving from the perspective of adoption of blockchain in a variety of industries. Dave Krause is Assistant Professor of Practice in Finance at Marquette. Since 2004, Dave has served as a director of a very prestigious applied investment management program that allows a select group of finance majors to get hands-on academic and financial analysis experience, including an opportunity to actively manage domestic and international equity and finance income portfolios. Dave will moderate the panel till the end of this session today. Dave, it's over to you.
Thank you, Monica. Hello, everyone, and welcome again to the Milwaukee Blockchain Conference and to Marquette University. I personally found the first sessions to be very informative, enlightening. I certainly learned a lot, and I hope you did too. I teased Lamont before he came on stage that he had a tough act to follow. Wow, do I have a tough act to follow with both of those. I saw Lamont signing autographs in back, okay? Is he still here? Because I got news for him. Milwaukee actually had forward contracts, which we'll refer to as futures, before Chicago. Okay? I've done that research about by 18 months. So we're closely aligned with Chicago. It's very good to hear all the positive things that are taking place in our respective areas here and with regard to technology. So very exciting opportunities for all of us to work together. All right, so you're wondering, what in the world is a finance guy doing with a distinguished tech panel that we have here? Well, one thing about finance that most of us know is we have to be forward-looking. As investors, we have to invest our money today, but it's based upon future performance. So we very much care about disruptive technology. We want to be investing in companies that aren't going to get overrun by Amazon. We want to own the future Googles. So we're very interested in learning more about blockchain. So I, for one, don't have answers, but I have lots of questions, and I know you're likely to as well. So where did that concept of following the puck come from? I try to explain this to my students. They don't know who Wayne Gretzky is anymore, but he was the great one, greatest hockey player of all time, scored at a prolific rate. Undoubtedly the best player at that sport we've ever seen. And very humble guy, but he was attributed with this quote when once asked about his success. And he said, "I skate to where the puck is going, not where it's been." And that's what we're trying to do here, and that's sort of why the theme here, where's the puck going? Where's blockchain going? A lot of interesting things taking place right now. It's great to get the history of where Bitcoin and blockchain came from. I care more about 2018 and 2019 and 2020 right now. And I think a lot of you do as well with regard to your companies and your careers. I don't know if you heard the bumper music that was being played, all right? There was a Dylan song, and there was also Guns N' Roses, all right? So what's the significance of that? Well, first of all, like Dylan said, the times, they really are changing. I think there's a sea change of activity taking place that's going to disrupt financial services, healthcare, the legal profession, and on, including higher ed. And then why the Guns N' Roses? Well, as you know, Axl Rose and Guns N' Roses were in town this week. They performed for over 3 hours, nothing like good Milwaukee work ethic, right? But as we well know from their most famous song and lyrics, where do we go now? And that's really what I want our panel to be doing for us right now, trying to help us figure out where do we go now. So what we're going to do, I'm going to start out with a question for each. I'll do an introduction of each of our guests, and then I'll start out with a question. We'll work our way through the panel, sort of rinse and repeat, to work through the 6 guests that we have here. And then we really want to open it up to you, the audience. I thought there were great questions asked by many of you during the first sessions here. We'll have plenty of time for you to talk to these people who are very knowledgeable about blockchain, particularly with respective industries. So again, being true to applied, we can dig a little deeper than just generalities. We can get into some of the industries. So what I'm going to do is I'm going to start with our first expert panelist, Bob Cornell. Bob is the lead emerging technology analyst at Northwestern Mutual. Bob joined Northwestern Mutual in 2016 and works in research and digital innovation. As part of his role, he is the primary blockchain researcher for NML, which is a Fortune 100 company located in Milwaukee. Prior to joining Northwestern, he held positions in corporate strategy, business development, and competitive intelligence. And Bob was a part of that M&A team that did over $2 billion of healthcare software-related acquisitions. He's an active investor. He currently holds 5 issued patents with 4 others in a pending status. So it's a pleasure to have Bob here. So, ready to go? How's your cold?
I'm doing better. I might be a little froggy.
All right. So, Bob, it's been said that blockchain is going to do for the financial system what the internet did to media. It's going to facilitate and enable the movement of money and contracts similar to what the internet did to media and data. So Bob, this is a real general question. I think it's fair to start since your background is being the primary researcher for MNL. Is this really a game changer? I mean, is this something that is going to happen but maybe not as fast as we think it is? How quickly is this coming? I don't think from what I heard today that this is fake news. I think it's real. But sort of the question is, where is this headed? And you can put it in the context of your experiences maybe with NML.
Sure. Can everybody hear me okay? Yes. Okay, fantastic. Great to be with you this morning. I think it was Bill Gates that said we tend to overestimate the amount of change that will happen in the next year or two, but underestimate the amount of change that will happen in the next 10. I think that's a truism when it comes to blockchain distributed ledger. Like the introduction said, I've been with NM since 2016, very early 2016. Very focused on this space. And so this is just kind of an anecdotal observation, but I've really noticed an inflection point, probably mid this year. 2016, it seemed like there were niches where this was starting to brew some interesting levels of interest, but moving into 2017, it seems like the fact that we can fill a hall like this. A couple weeks ago, I was in Chicago. There was a similar hall filled. It was over capacity. They had turned 60 people away. The momentum is growing. I think the realization of what the potential here is, or what it could be, is growing and is getting some traction there. I think it would be fair to say that, yes, this is going to have that kind of transformational potential for kind of the fabric of global commerce. But there's some other hindrances, I'll call them speed bumps, I guess, on that path. So think along the lines of regulatory patchworks, regulatory uncertainty. That's something that isn't really clear at this point. Some regulators have come out and issued some guidance, but I would challenge, do any of you feel comfortable that you have a crisp view of the regulatory environment with which you would have to interact with confidence? I would presume that the answer would probably no, or I'm not sure. Also, the fact that there's the lack of real interoperable standards between different chains. That's something that really needs to be worked through as well. So those are just some high-level kind of, yes, the potential is there, but we have some speed bumps and kind of the near to intermediate term that we would have to overcome as well to really reach that.
I know Northwestern Mutual is not a publicly traded company, and so I'm not going to get in trouble with the SEC for asking you to reveal non-public material information, but what ways is this going to find its way into the insurance industry?
It's a fair question. I think that is still an open question. I haven't cracked that. I'm not sure people have. So I think you're probably going to see it nip around the edges. So potentially, and this is not an NM statement, this is just a Bob observation, kind of a hypothesis here, but things around facilitating payments, whether that's payment of premium, something like that. The discussion around the fees associated with credit cards was mentioned earlier. The fact that you can transmit currency, funds, assets, whatever you want to call them, seamlessly with very low cost. That's probably one of the first ways that you might see it start entering.
Right. Thanks, Bob. We'll move on to our next panelist, Bill Caraher. He's the Chief Information Officer of Von Briesen and Roper, a Milwaukee area law firm. He has over 20 years of experience managing and supporting technology within his enterprise. As the Chief Information Officer and Director of Operations, Bill's passionate about innovation and business-focused technology solutions that empower the firm's attorneys and support their clients. Under his leadership, Von Briesen was the first Wisconsin law firm to implement artificial intelligence with IBM Watson-based solutions. The firm is researching uses for blockchain and related emerging technologies to keep ahead of the curve. As a Marquette alumnus, Bill is currently an adjunct instructor in the College of Business and has created and taught a course on technology at Marquette's Law School. The recipient of various technology awards, Bill was most recently named Chief Information Officer of the Year. Did I slip and say Investment Officer?
Information.
Okay, good. That's my asset management background sneaking in here. Chief Information Officer of the Year by the Milwaukee Business Journal. All right, Bill, pleasure to have you here. It's been said that one of the industries that's likely to be the most impacted by blockchain is the legal profession. With smart contracts, we know that the potential for basic legal services such as writing wills and trusts and participating in real estate transactions might actually disappear, or a blockchain might supplant. We also know that regulatory and other issues are going to crop up that'll probably create an increased demand for legal expertise in the area of blockchain. So help us understand more about how blockchain is going to impact your life in the legal industry.
Great, thank you. Happy to be here as well. And I'm also a DePaul alumni, so for Lamont. That was my undergrad. So in the legal industry, I've got a bunch of notes here. I don't want to forget anything, but we're kind of at year 0 or maybe year -1 when it comes to blockchain. Like academia, you know, legal tends to follow or not be a leader, and that's intentional. You know, we are in the area of law. We're interpreting the laws. We're defending the laws, and the laws are definitely also behind technology. You know, when you think of even the Communications Act and how far behind that is with social media and everything else. So, you know, we're at a disadvantage when it comes to that, but not first to market movers, and that's okay. Apple is usually not first to market either. So I see legal with 2 specific paths and opportunities when it comes to blockchain. So first I see solutions that make the legal process and the serving of clients better, more efficient, adding value to clients. And then the second would be the opportunities and challenges within the law itself and the shifts in expertise. So lawyers that had previously done basic contract law may shift their expertise into blockchain, smart contract law, something like that. So first, so the applications and solutions, I would say, you know, there's tens of thousands of law firms. Every company of any size is also engaged with either corporate internal counsel or they have outside counsel. So lawyers are driving a lot of business regardless of, you know, your thoughts on the industry. But you need representation. Even if you're a startup using LegalZoom, you are involved in the legal industry and consumer of legal services. So how are, you know, they're already being disrupted with things like LegalZoom. I'm kind of feeding back here. In the context of blockchain, there's hundreds of startups already trying to compete for this nut of smart contracts, of how do we authenticate users, how do we record transactions in a blockchain situation. So we don't want to just forget that there's, the startup movement in legal. There are hundreds of established vendors already providing legal solutions and applications to law firms and corporate legal departments. So those vendors and solution providers are not sitting idle. They're already developing solutions as well. So we have the startup space focused on legal. We have the established vendors focused on legal, all coming up with great ideas and suggestions. The smart contract, just to walk through, because we haven't really stepped through a scenario, but let's take the example of a will or an estate plan. So traditionally, you meet with an attorney, they go through a questionnaire. Okay, you have assets, and you want to distribute those assets at the point of your death. In a smart contract situation, you also answer those questions, but the contract itself would distribute the assets. You wouldn't have to meet with a trustee. You wouldn't have to meet with the attorney after your family members wouldn't have to meet after your death. The contract would execute your wishes automatically. Now that's kind of scary territory when you think about it. So you've got a contract that is waiting for you to die, and waiting and waiting and waiting. Okay, and how do you authenticate someone's death? The recording of death certificates in the government processes. We're back to centralized government maintaining authentication on your death. Okay, so we have to solve that problem first. How do we authenticate your death? And then the contract will go out and validate that death has occurred and now execute based upon that. So that's distributing, removing money from accounts and distributing wealth to other accounts. They're taking assets like homes and vehicles and changing title automatically and registering it to the execute. It's a very complicated thing when you think about it. So if you ever hear of someone saying, yeah, we're in a law firm, we're using smart contracts, well, ask some more questions, because in the context of a will or an estate plan, this is a very complicated process, and I guarantee that there's no law firm out there doing smart wills like this. The technology just isn't there yet to authenticate all of these little steps. So there's a lot out there. But when we talk about smart contracts, our firm has been using smart contracts for over 10 years, but it's not tied to the blockchain. So smart contracts, in the fact that just in this example, we do it's almost like follow the story. So you do an interview with someone and say, I want my wealth to be distributed in this way and in this regard. But okay, you have to ask a question, are you married or are you single? Okay, that opens up different sections of the document. If you're single, then these statutes apply. If you're married, and what state do you live in? What state are you registered in? Okay, then these sections of the contract apply. So we already have that technology, and it's just applying it to blockchain technology. So great examples with challenges and what's going on. That second opportunity, and I'll just wrap up quickly because I don't want to take everybody's time, but is the changes in the law and the changes in case law, the changes in statutes, and the changes in expertise of the legal individual that you go to, your attorney. So we've talked about today, blockchain is a trust framework, right? The attorney-client relationship is also a trust framework when you think about it. You tell your attorney secrets that you don't want anyone else to know, and attorneys are bound by the attorney-client privilege. By law, they cannot disclose those secrets that you have told them to anyone else. And so that's a trust relationship. So if we're now transferring that trust relationship to something like the blockchain, even something as minute as an engagement letter, you come to me, you want me to represent you as your attorney, I'm going to fill out a letter that says, you and I agree that now I'm your attorney. If I file that letter that has no detail other than you've come to me for legal representation, I save that to the blockchain, that's now a public record. If I'm Rockwell Automation and I want to sell my company to ABC Corp, I've filled out an engagement letter on the blockchain that's public information about a public company. That could be scary, right? Okay, it's encrypted. Well, great. Who has the keys? So these are questions we have to think about when we say we're going to start engaging the blockchain in a very private and confidential relationship. These are challenges we have to think about and overcome before we say, yep, we're turning over our law firm and our confidential information to this system, whether it's open, closed, public, private. These are questions that have to be answered. So lots of challenges. Very excited to be here, and look forward to more discussion.
All right. Thanks, Will. For all of you, he teaches a course in the law school and in the business school. So glad to have you on our side. And Lamont, you know, once I looked like you. I used to be 6'3" and have hair and handsome and all that. So someday you'll be in this position. Our next expert is Michael Adam. He's the Chief Executive Officer of Bank My Biz and the founder of Launch. He's a seasoned fintech entrepreneur with a passion for innovation. In 2013, Michael founded BankMyBiz.com, an online lending platform that partners with traditional banks nationwide to help them better serve their small business banking customers. In 2015, Michael founded Launch, a software solution that streamlines corporate electronic documentation, signature, identification, and payments processing. Launch is among the first enterprise-level software solutions that uses blockchain and distributed ledger, and it's used in the banking and technology, financial services industry. Michael consults with banks across the globe on technology strategy, and prior to launching his company, he spent a decade as a commercial lender specializing in technology. So, Michael, I think this is an industry that's right in the crosshairs right now. I mean, blockchain, we've heard, can untangle the web of loan documentation. It can shift global payments onto the blockchain. It can digitize, modernize global trade finance, and it can improve identity verification of customers and counterparties. In other words, it's going to transform the whole banking industry, it sounds like. What do you think about that? Can you enlighten us on banking and the blockchain?
Yes, absolutely. Thank you for having me here. So it's very interesting because in a lot of industries we talk about blockchain as what will happen. In banking, I think we're in a unique place because we can talk about what is already happening. So in the banking and financial institutions industry, this technology is already being implemented. I'm sure many of you have heard of our R3 consortium, which is a large group of corporations, some of the top banks in the world being part of that. They're looking into creating their blockchains already. So if you think in a financial institution, there are, depending on the size of the bank, even a community bank, there are thousands and thousands of documents and transactions that happen daily. And to put it in a simple context, if you think of just like a small scale scenario, if you have Bank A, Bank B, and Bank C, and they're all working with one customer. So you might have a mortgage here, a car loan there, some investment products here. So there's a tangled web of interactions between all those. The banks they're not sharing that information right now. In fact, if you apply for, has anybody here applied for a small business loan ever? Or any type of loan and you needed a personal financial statement? And you went to one bank and they said, your personal financial statement must be filled out on our Associated Bank letterhead. And then you go to another bank and said, your personal financial statement must be filled out on our JP Morgan letterhead. Why? I have a personal financial statement, I'm just writing down the same thing. So in this tangled web, we have all these interactions, and that's just 3 banks and 1 person. Now think globally, you have hundreds of thousands of banks and billions of customers. What the banks want to do is have this information seamlessly interact with each other. They want to talk to each other, not only for their own purposes, but for the purpose as a customer as well. They want to have the customer's user experience be better. As far as global payments, this is something that's also already in existence. So the Royal Bank of Canada is now experimenting with some blockchain payment movements between the United States and Canada. So that technology is already existing and will become more robust as the technology develops. You mentioned global trade. This is also something, it's not speed of payments, but it's speed of, I guess, ownership and transfer. So in the 1920s in New York Stock Exchange, we talk about like T+5, so transaction plus 5 days. And that's where we were in the 1920s. And then in 1995-ish, we went to T+3. Miraculously, why? Because the internet came around. So that allowed us to reduce our time of the transfer of ownership and payment of that stock, made it much faster. With blockchain, where we're thinking is going is hopefully will be at T+0. So it'll happen instantaneously. So it's going to have a huge effect on the global market and global trade, which is all very interesting. Identity verification, I know Mark talked about it quite extensively. It's giving power back to you, the individual. Hopefully at one point you'll be able to just hold all of your records and have all of your information and give it to whoever you think is worthy of it. So let's say you fill out a small business loan application. You've already done all the paperwork, just like I said with the personal financial statement. You have to give a bank a personal financial statement, 2 years business tax returns, 2 years credit tax, 2 years personal tax returns, up-to-date P&L, and some other supporting financial documents. You have to do that every time you apply for something. Those same documents will apply, some of those will apply if you need a car loan. The same documents will apply if you're looking at some type of investment vehicle at some type of financial institution. So if we put all this on, I won't say distributed ledger because it's going to be a private ledger in this industry for a while until it gets to scale. But that makes those transfers of the documents so much easier. And for you having your digital identity makes it so much easier for you, the consumer, because you're not having to dig up and drudge up this information all the time. So how is it going to affect banking? I think it's really going to affect banking. And that's what we're concentrating on with that doc launch. I mean, our whole mission is to, one, streamline the efficiencies of the banks, but then also making the user experience for the bank customers better, and by using and implementing blockchains and smart contracts and payment solutions.
All right. Thank you, Michael. One of my colleagues is in the audience, Dr. Kent Belasco, who is the director of our relatively new commercial banking program. And I know that come January, I believe we're going to have another forum, somewhat like this, but focused on the impact of technology in the world of commercial banking. So stay tuned for that. We're going to continue to offer opportunities like this to advance our knowledge. Our next expert is Girish Ramachandra, Senior Manager for Market and Solutions at Whipley, an accounting and business consulting firm with offices throughout the United States. Girish is one of the leaders within Whipley's technology consulting division, focused on helping companies transform their business through technology. Leveraging his experience and knowledge of fintech, he helps financial institutions, fintech startups, and investors to collaborate and establish sound business working models. Let's see, Girish, I've heard that supply chain is going to be one of the areas that is going to be most quickly impacted by blockchain. Can you talk about that? I know you have a world of business experience. Then also, we've mentioned cybersecurity a few times, but not yet in the context of this discussion. So feel free to address either or both of those topics.
All right. So Whipley is an accounting and consulting firm, and I'm a technology consultant, and I'm having the best of times a technology consultant could have in an accounting firm. The reason why? Because I think accounting and audit is going through the most exciting time in the last 600 years, since the end of 15th century, after the double entry bookkeeping was invented. Today, the reason why Whipley got interested in blockchain is, somewhat out of a fear that, I think Lamont was mentioning, if blockchain is going to deliver everything that it is promising, then perhaps the government is going to tell you how much tax you owe or how much refund you owe, and the government is going to give the tax to you back. Auditing and accounting, if everything is going to be on blockchain, well, in 10 to 15 years, we might see a significant change. All right, that's about my time in Whipley. So coming to supply chain, Whipley works in multiple industries, so supply chain, logistics, manufacturing is one of the biggest industries that we work with. Before I go into very specifics of supply chain, how many of you here really are serious about your coffee? All right, there you go. So what I meant was, how many of you are serious about how it is dried, how it is roasted, where it is sourced, and what kind of labor was used to source coffee, and how it is supplied to your endpoint? And how many of you here are serious about the apparel you are wearing is not manufactured using some unethical means or child labor or whatever. How many of you are serious about it? Well, some of you are. A survey says a significant number of millennials are very serious about the products that they are using, whether they are produced using ethical means, whether they are produced using the corporate standards they are met. And I believe blockchain is going to make a significant impact in the way that it is ensured that whatever we are consuming today, they are made using some corporate standards that are generally acceptable. There are multiple uses of blockchain that I see generally in supply chain. The biggest is to make sure that the corporate standards are met. Second biggest use I see is reducing of costs, or reducing the use of counterfeit products and the malpractices related in gray market. Making sure your outsourced manufacturing contracts are met properly, reduction of paperwork, so on and so forth. So essentially, wherever there is a centralized trust-based authority, or wherever there is very complex way of tracking in practice today, blockchain can be used to gain efficiencies. So supply chain perfectly fits the where there is complex regulations, wherever there are very complicated needs of monitoring and traceability, wherever there is a need for better transparency, where there is a better demand for transparency. So that's where the blockchain is going to play a key role in supply chain. One of the best case studies that we heard recently, some of you already may be aware of that, Deloitte partnered with, I think it's DNVGL, to put about 90,000 shipping certificates on blockchain. So adoption of blockchain is already happening in supply chain. People are pretty serious about reducing paperwork and all the other reasons that I just mentioned. The traceability and transparency are going to be pretty big. So those are my views on supply chain and using blockchain on supply chain.
Okay. Thank you, Girish. Oops. Well, give the people what they want, all right? I'm going to introduce Will Pangman, who's the founder of Bitcoin Milwaukee and a partner in Taurus Vision. Will's a passionate entrepreneur. He's an active proponent of Bitcoin education. And boy, do a lot of us need to get schooled up on Bitcoin in a hurry here, I think, cryptocurrencies. All right, Will. Blockchain, cryptocurrencies, initial coin offerings, ICOs. Look, I'll admit, I'm a finance professor, and I'm still struggling with the ability to explain the value of a cryptocurrency, whether it's an asset or a payment stream, how in the world these ICOs are being created. The other thing that's going on, it's very difficult for me, a valuation expert, to try to explain $7,500 for a Bitcoin. I have enough trouble trying to explain gold and commodity pricing, let alone Bitcoin. And then it feels like a bubble at times. Something's going on right now. Two companies in the last week have added the name blockchain to the name of their company. One is up 400%, and the other is up 200%. And some of you remember the dot-com bubble, where all you had to do was add a .com to your name. In fact, if you lost money, that was even better than if you made money. It kind of feels a little frothy here, Will. Help me out, all right?
Yeah, hi. It's good to be here, everybody. This is just a wonderful event, so congratulations to all the organizers. I'm thrilled to be here. Such a great group of panelists and other speakers as well. It is frothy right now. It's easy to see. My view is that there's still tremendous headroom in this current cycle. And there's lots of thoughts and reasonings for that, but just to get right down to it, the valuation question is really important. I thought, Lamont's slides were really excellent at talking about where Bitcoin's value comes from. And if you were inferring that from some of his slides, I think that was helpful to a great degree. Really, it comes from a lot of areas. It comes from the fact that it's mathematically secured as opposed to by decree. It comes from the fact that it's distributed around the world. It's unkillable. It comes from the fact that there's a network effect. So, on Facebook, for example, anyone on Facebook is a user of Facebook, but Facebook has a business model, and you're a part of it. You're actually a product in their business model. So, and they've done a fantastic job of attracting users to this network and providing value to users, as a news stream, as a connection to old friends, making new friends around the world, joining communities you could have never been a part of before. So blockchain, Bitcoin really inspired all this. This is a way to derive network effect. So jumping all the way ahead to kind of ICOs, same thing. People who have an idea where they are intending to create a kind of platform economy for an application or for some big project concept they have. It makes a lot of sense if you're going to kind of create your own economy with your user base and your network to launch your own money. And, it's analyzing the history of this. Again, some of Lamont's slides were excellent on this, but there's a lot of value in the network, not just in getting people to pay to use things, but getting them to be on the platform. And so I think if you look at the valuation of Bitcoin in that light, and if it's going to reach even 5% of the promises it has offered so far, there's a huge upside. There's probably maybe 10 million users of Bitcoin in the world today. Maybe that's a little low, but active users is what I'm saying. And if you think about that number, and cryptocurrencies as a whole, maybe like another 3 or 5 million on top of that, who aren't maybe interested in using Bitcoin. But so we've 15 million users actively, probably. There's tremendous upside from the valuation side of things there. Of course, ICOs are getting a lot of notoriety and infamy, perhaps, probably, because of just much like the dot-com bubble. There is so much interest out there. People are throwing everything they can at the wall to see what sticks. So really, I want to just kind of talk a little bit about ICOs and then close with just some kind of thoughts and maybe suggestions for the group. But there's tons of opportunity here, and there's tons of scams, and there's a lot of non-scams that are just bad ideas and don't need a token, and it doesn't apply for the business. But and that's what we're seeing today. But tokens can do lots of things. In order to be compliant, some of these projects are registering their token as a security because that's the way they want to use that token in their platform. There's limitless ways to use tokens to do things in a platform, and so this is another huge green pasture. And the SEC guidance that came out a couple months ago basically, gave a blank check to all these entrepreneurs saying, if you are creative and you're going to do your best to not be a security, or if you are, register, there's tons and tons of ways to apply this technology. So it is a huge green pasture, and it is very frothy and bubbly right now. On Monday, we had, the ecosystem saw 400 new ICOs launch on Monday. So next Monday, it may be more. And in Q1 of next year, it will be more. And that's not stopping. You'll see existing companies launching tokens like you saw with the Kik Messenger app, and there's some others. And there's some interesting things you'll see with the crowdfunding space and regulated crowdfunding. If anyone's familiar with Title III or the Jobs Act, this is something that was a really good thing, actually, in the US to allow entrepreneurs to allow average people to get access to high-performing investments like new ventures, and also to allow entrepreneurs to get access to the crowd where they otherwise are trudging up Sand Hill Road and striking out a lot. So this is this is excellent for that reason as well. ICOs kind of puts that on steroids and to the moon and everything, right? So I guess there's ways to do this regulatorily compliant in the US as a US founder, and there's a number of ways that will become new ways to do this as well. I would like to see Title III of the Jobs Act. I'd like to see someone tokenize an offering on Title III, so just give you some ideas. And yeah, so in closing, ICOs are not going away. The bubble is probably going to blow up bigger. And if you're involved, that's what the work I do now. I consult with companies on this and help them kind of from idea to exit with these kinds of designing these sorts of raises. This is a new investment vehicle, and it's going to be fascinating to see how much value it unlocks and how much wealth it creates. So,
good. Thank you, Will. We're all gaining a lot of knowledge today in different areas. I'm involved with the Make a Difference Wisconsin group, as I know a number of you are in the room. We've gone into underserved communities to try to educate middle school and high school students about proper fiscal management, financial literacy. And think about it, we're going into these classrooms talking about checks and check registers. I mean, I think version 2.0, we need to be going into our schools and educating about current currencies and current electronic and other payment practices. So Will, I'm going to solicit your support for that and get you involved, okay? Thank you. Wow, Derek, I did the math. I could be your grandfather, you know that?
It's depressing.
And look at this, he's the only one with a tie on, all right?
I got to make up for the age difference.
Derek's a UWM undergrad. He's a finance student. He's the chief financial officer of Coinigy. He's not even old enough to legally drink. Notice I said legally, Derek, right? Okay. His firm, Coinigy, is a blockchain capital markets company. It's a leading professional trading platform for blockchain exchanges around the world. With over 200 million in assets controlled and 1 billion in July trading volume alone, Coinigy has grown to be a trusted brand by thousands of users globally. Besides his firm, in 2015, he was one of the earliest team members at Storage, a decentralized cloud storage network utilizing blockchain technology. I always bring speakers into my classroom. I'm an applied professor. I brought Derek in about a month ago, and it was fascinating. I mean, Derek talked about blockchain technology having profound effects on the future of financial markets, capital fundraising, product and business models, and networks. So Derek, talk a little bit about Coinigy. Don't do a blatant ad here, okay? You're not out fundraising, are you?
No.
Okay, good.
Unfortunately not.
You don't want to violate any securities laws. But, talk about some of the recent events, too. The CME and other exchanges now are going to create Bitcoin and other cryptocurrency indices. Bring us up to speed on what's going on in that part of the market.
Yeah, so Coinigy was started in 2014. It was basically, like you said, kind of an aggregation tool for all the exchanges around the world. Just this month we broke, or not we, but the ecosystem as a whole, we're approaching equity market values in terms of volume. About $300 billion, so the market's expanding. Coinigy itself, some updated figures, we're doing about $500 million in assets right now, about $2 billion in volume for a pretty small Milwaukee company of 5 people that are full-time. In terms of kind of looking at the market, we'll touch on a lot of the ICO stuff. I won't go too much into that since we are in that kind of area. We trade those assets and users can use our platform to trade those. It's a scary, scary place to be since we're kind of on the portal side of it, seeing all of it come through. And to date, as far as I know, more money has been raised in that model in ICOs than has been raised in venture capital as a whole globally. So more money has been given to these projects than from Andreessen Horowitz and all the venture capital around the world, which I mean they're not doing due diligence on these things. They don't have an MVP. There might be like a white paper and like 2 guys in a garage, which is the 1990s again. So I do think there are like the Amazons and the Googles and the Facebooks that are in the space already, and they're already here, but I don't know what those are. I don't think really anybody knows what those are. And in terms of going from kind of a more philosophical point of view, looking at it from kind of a business model, traditionally you either raise equity or you raise debt in the market. If you can raise like a token that's used in your software, it's an entirely new service and kind of product, if you will. Within Coinergy, we trade those assets and seeing in terms of like going from kind of your point of view, Dave's point of view, and the valuation of these. You can't run a DCF model on one of these. You can't run like a bond payout model. You can't run the GDP of a country to find the currency of it, the value of the currency. In terms of like valuing Bitcoin, I have no idea how to do it. I mean, you can talk about the utility value in terms of it takes computing power and opportunity cost to value it. So whatever the electricity cost is and the computing cost is, that's like your base utility value. It's like the book value is the kind of the word I like to use. And then there's like the ongoing utility of that. So you can pay it globally. What is that worth to you to pay a friend in the Philippines that can't get a bank from Western Union or anything? And then there's the speculative value, which is probably why we're at $7,500 right now. And then from like a business operational model, working in this space and actually a real company gets paid in the space, it's really, really scary to manage risk and everything. And then on the risk side of things with the CME and the CBOE launching futures, hopefully we're going to be able to track that. They want to have it to mitigate risk. Everybody knows that derivatives and options are actually now used to take on more risk. Interestingly enough, if you really dig into the nitty-gritty, the CME futures are only daily settlements, so you can't trade minute to minute. And then, I mean, there's companies now that have derivative spot options on this stuff. I don't know where that's really going to go. I mean, the SEC has to come in here more and actually get like regulation on the back end of everything. But like Will said, I mean, there is a lot of frothiness in this. Where it's going to stop or where it's going to kind of downturn, I have no idea. I don't know if anybody really knows. I don't think any of us are smart enough to know that. But it's an interesting space to be in.
Fascinating. So here we had 6 experts representing specific industries, insurance, accounting, banking, and our cryptocurrency. I found this fascinating as well as the presentations this morning. Here's an opportunity now to open up the floor for questions. You're sitting here with 6 experts who are on a regular basis, daily, responsible for providing internal as well as external consulting and advice for their clients and employers. So please, let's see if there's some questions from the floor right now. So, Garish, would you sort of summarize the question?
Yep. So the question was, today we use IoT devices to gather data to monitor the supply chain, and how do you secure IoT devices is the kind of the question. Okay. Well, blockchain will not solve that problem. Blockchain itself can be pretty secure. I don't think blockchain can solve the problem of security with IoT devices itself. That's a problem that IoT devices have to deal with. Well, IoT, opens up a whole new debate. So let's not get in there. So the data on blockchain is secure, in my view. So, but the IoT devices, I don't know how to answer that specific question. That's an IoT question. That's not a blockchain question. Well,
and again, summarize the question so everyone can hear it.
Well, the question is, there is a limitation of using blockchain to supply chain because it is limited by the threat of somebody hacking into IoT devices that's coming in. I agree, but that is again an evolution in the synergy of different technologies coming together. So, that kind of leads itself into the question of what are the limitations of using blockchain, or what comes in the way of adoption of blockchain. So what comes in the way of adoption of blockchain? One is education. The mindset has to shift significantly. The second one is the building or scaling up of ecosystems such as IoT devices itself, or interoperability with other systems. Blockchain cannot just operate by itself in an island. It has to interoperate with multiple other systems. So one of them is IoT. So that's one of the challenges which will have to evolve eventually for a full adoption of blockchain in the next 3 to 5 years, or we don't know.
Again, IoT, Internet of Things, ICO,
Right.
initial coin offerings.
Right. So, but blockchain, the way it is designed, kinds of lends itself to interoperability with other technologies, including AI or Internet of Things or any other technology you throw it out there, because it's fundamentally an immutable ledger. So everything has to be kind of synergetic with the ledger, which is keeper of the data, keeper of the traceability, keeper of accountability and ability to monitor.
Okay, next question, sir.
So, well, it's interesting you mentioned AI, because that's where my question is. So, Bill mentioned the sort of the intersection of AI and blockchain potentially in smart contracts as an example. So I'm just curious if you guys could talk about what are some other examples, either, in supply chain or in other areas where you see that intersection occurring?
Anyone want to tackle that?
I guess
Might be great.
one area is definitely applicable to some of the solutions I think Bill's working on with his firm and other law firms interested in the space. There will be a need for, as these different decentralized applications become live and become used and start to address higher order problems, above just payments. There's going to be a need for oracles and secure identities, and I think that reintroduces trust to the system. So I think there is always going to be some small amount of trust needed in some area of these systems, and especially as we reach the higher order problems and solve them. So I think one of the things that can keep that trust very low would be, some machine learning, deep learning, or AI system working with an Oracle service to kind of automate some of those determinations that the Oracle's making. And then, of course, those determinations are going to be involved in some sort of transactional thing for whatever higher order decentralized app. Solving various problems. So I'm thinking from a legal context, it could be as simple as, an oracle that tells the system when physically keys have been handed over for a home, right? From a past tenant to a new tenant, or a past tenant to landlord to the new tenant. I could see, in the document process, in the smart contract being involved in that transaction, and perhaps some level of AI working with the Oracle service to make sure that the real world things that have happened actually happened, and then tell the digital world, the blockchain world, the VR and the AI world, what happened, what actually happened, so it can also take place in that system. So
All right, we'll go one more over here and then we'll switch back and forth. Next question, please.
Oh, all right. Hi, I'm Joe Baker from Remedy Coin. And I guess, Bob, maybe this goes to you. I was hearing you talk about how this might affect insurance. And I've compared kind of the things that I've seen that inspired Remedy Coin, like damages to individuals, with auditors maybe or not, appraisers, right, in insurance claims. And I'm starting to see this morph into an idea of, well, we have a claim substantiated and tokenized and all this. What's to keep this from disrupting the insurance industry? People are always looking for where they can put their value, maybe not to gain, but just to hold value in a place where, in a concept of a future where there's a crash in the fiat system, you want your money in something that's substantiated. So do you think this sort of thing could, you know, I don't want to say eliminate insurance, but kind of cut in on their business, where people are willing to actually fund someone who's documented damages so that they can hold a piece of that damage?
Okay. So you mentioned claims specifically. That is an important aspect of our business. We want to make sure that we're there to fulfill the promises we've made to our policy owners. But I would say the nature of insurance is, at its base level, is trust. And so there's trust that you do have the financial wherewithal to back the promises you've made, that you are known as a good actor. And so there's some aspects that could speak to that. But on the claims side specifically, I think you bring up an opportunity potentially to streamline a process to have a better experience. But I don't know if that would necessarily be disruptive in nature.
This is quick. Is the claim that someone files against you, or is it against the person that injured them?
Well, we're on the life and disability, long-term care side of things. So that's more property and casualty, so I can't really speak to that.
Okay, thanks.
Okay. Over here now.
Hi, I came a little late, so this has already been answered. Excuse me. But so basically, as Bitcoin and the whole ecosystem scales, do you see proof of work becoming an issue and the transition to proof of stake becoming a necessity?
I have a quick thought on this. I think I know there's a lot of concern about the amount of energy consumption going on for a proof of work system the size of Bitcoin. I don't see that as wasteful at all. I can probably give a nice long argument about why, but I think the world will always have probably one, maybe more than one, but probably at least one proof of work system similar to what we see with Nakamoto consensus on Bitcoin's blockchain. And that will be kind of the reserve chain that all the other staking chains that maybe use other mechanisms for consensus, proof of stake, delegated proof of stake, whatever it may be, they sort of depend on, right? The one large proof of work blockchain. That's what I think. Just a quick point on the energy consumption. I think in places where mining operations are very attractive, those miners they're not just doing like arbitrage on energy prices. They're actually storing otherwise unused energy in the Bitcoin that they create with mining. So just think of Bitcoin as a battery in this sense. Okay, so in China there's ghost cities, and ghost cities have miners near them because those power plants are pushing full capacity power out to empty cities. And when that happens, the grid can't use it, and so it's wasted otherwise. The miners aren't wasting it. They're getting it very, very cheap for that reason, and they're kind of storing it in the Bitcoins that are created. And again, to the valuation point, you can kind of see how sky's the limit, if you think down the game theory of that. So I think there will be one proof of work system at least, and we'll always have at least one.
All right, thank you. Go over here now.
Hello, my name is Dan Schultz. I'm with the Wisconsin Badger Blockchain Group, head of use case analysis. I was wondering, and maybe this isn't in any of your field of expertise, but if one of you could comment on the recent agreement to avoid the hard fork and how that affects the nature of, just comment on the nature of the way these technologies fork in general maybe, and how this might set a precedent for changes going forward, reaching consensus in specifically the Bitcoin community.
I can take this, I guess. So if you read I think I'm right, you can correct me if I'm not, but I think if you read the original white paper, he actually predicts that this is all going to happen. There's going to be disagreement in terms of the software and the code, and so he wants these forks to happen. And for people that don't understand, you have to have 51% for any code update to actually go to the market. And if that doesn't happen, they can basically fork off their own asset, and that's what these SegWit, all this forking stuff is about. In terms of the longevity of that, if there's a better idea, eventually in the long term, I think the logical minds will kind of come to it. It was interesting though with that fork. I mean, if you read the original, like the email that came out, it was literally signed by 6 people. And so it was quite literally like 6 people were going to control this fork out of the whatever millions of people that are in the entire ecosystem. So there was kind of like a collection of power right there, which if anybody kind of gets the theme, this is kind of anti centralization. And so it's like it's like Jeff Garzik and all those guys. I mean, there was like 6 people that signed that email saying we're not going to do it anymore. So if 6 people are going to control how a currency that's used by tens of millions of people are, is coded and kind of the block size of it and everything it's kind of scary. So.
If I could follow up just quickly on
please.
that. I think the idea of forks, especially whenever it comes to like the exploit or hack of the Dow last year, the rip from the headlines, who knows what they'll do with the most recent issues with the wallet breach. But I think that really speaks to blockchain is potentially good for use cases in which they're not error-prone processes. You introduce error into it, whether it's an exploitative fashion or in a unintentional fashion, and you have these issues in which you have to consider, okay, do we fork and kind of revert back to the prior agreed upon source of truth? So these are instances in which these decisions around forks have been brought up. But to deploy this in mass as the underlying fabric of a potential future global commerce platform, you're really putting a lot of onus onto minimizing the error inherent inside of your processes.
And I'd say if significant value is lost, people want blood, right? They want to sue somebody. So who do you sue? Do you sue the blockchain? Do you sue, there's nobody to sue.
6 guys.
So it's an interesting thought too.
If some of these topics are doing whoosh to you, they are to me too, okay? I think that's why we're here. Yes?
Hello, my name's William. My background is in cybersecurity. I've worked with Johnson Controls in the past couple of years, Fiat Motor Company, but I've recently transitioned into doing more of IT compliance. With that, a lot of the work I've done, contract-based, has been in the UK, France, and Switzerland. And one of the big things that's coming out in Europe right now is the General Data Privacy Regulation, or the GDPR. So I'm just curious, in my work, I have to be sort of ahead of what's coming technology-wise and how this is going to affect the companies and the GDPR. So I guess I'm just curious, with all these new blockchain technologies coming out, I'm just really spend a lot of my day reading the white papers because I have to figure out how is this going to affect my clients in the future. GDPR it states that people have to know how you're collecting their data, where is it going, and these sort of things. I'm looking at technologies now, and I guess I just want to see what are you all interested in based, like technology-wise? Because I'm looking at these technologies and what they're bringing to the table, so to speak, and how they will affect data privacy. You have IBM and their Hyperledger, which is now based, or I believe they partnered with Stellar Lumens and their platform. And then you have Ripple, who's partnered with the Gates Foundation, Walton Chain in Korea, Neo, who is supposed to be like the Ethereum of China, because China shut down their trading, but thinking about spinning that back up. So I'm looking at all these various technologies and what they could promise or what they could bring to investments, cybersecurity, compliance, and law. I guess I'm just curious, what are you all interested in right now as far as emerging blockchains and potentially their concerns?
I'm going to try to invoke Lamont Black's lightning round idea. Anybody have quick answers to some of those? Yes.
Yeah, I mean, for me, you mentioned compliance in the banking industry. It's one of the most heavily regulated industries in the world. So at first, when bank compliance, the OCC, the FDIC started hearing about blockchain, they immediately just thought Bitcoin. And they were just like, oh my God, what are we going to do with this? But the more they dig in to really understanding blockchain as a mechanism, they love it. Because if you're going to tell an auditing firm or a compliance firm or the OCC or somebody that needs to go through every single bank record, they salivate at the idea of blockchain. I mean, to them, it's, yes, thank God. We don't have to audit. We don't have to go in. So in my world, that's what I'm very, very interested in.
All right, let's do quick lightning round questions back and forth. We've got about 5 minutes. So let's go here.
So not sure if this is touching on the same ground as the previous question about proof of work and energy, but I was reading something recently that said that currently credit card payment processing systems can handle like 10,000 times the volume of many of the leading cryptocurrency processing platforms. So I'm just wondering, as cryptocurrencies and Bitcoin transactions continue to scale, is there any concern from experts that the system is not set up to handle the volume of transactions that is likely to occur?
Absolutely. So you're spot on that the transactional throughput is a hindrance to current systems. But just in August, one of the founders of Ethereum published a white paper with some others introducing the idea of a platform called Plasma. And it's designed conceivably to handle up to billions of transactions per second. So they're going from a reduced capability mode versus, say, for instance, like the Visa transaction network to something that is potentially able to handle far more than the established networks out there from a transaction volume.
Okay, very good. We'll go over here now.
I had a pretty basic question. So, we heard a lot about, disrupting the banking industry, disrupting, supply chain, all that. What would you recommend the current student who's interested in this, what would you recommend that we do? Because, we can't all disrupt banks. We can't all disrupt logistics and all that.
Yeah, you can.
Well, I mean, not
Yes, that's right. Yes, you can. So,
What's your interest?
well,
Primary.
trading, like kind of, banking and all that, but, we can't all go into a bank and completely change it. It's an industry, you can't completely change, not everyone can completely change every industry,
well, these industries are pretty broad by the nature. Pick one problem and try to address that, and
Right.
that will scale up.
The truth is now you can hammer away in your dorm room or in your basement, and in very much no time at all, like 1 to 3 years, conservatively, you can change your life and do what you want to do in life.
Yeah, and as a student, and if you have any, passion for entrepreneurship, people always ask, like, how do I create a blockchain company? You don't create a blockchain company. You create a company that solves a lot of needs for a lot of people, and then you apply that technology to it to distribute it to as many people as you can.
There's a huge opportunity to do well by doing good, too. So people are focused on banking, insurance, those kinds of things. But I would encourage you to take a look at serving the underprivileged of the world as well. I think that there's a lot of opportunity to deliver services at low cost to them.
Look at the company.
Microfinance, yeah.
BitPesa is the company you could look at too.
Say that again, Derek.
BitPesa, is that the company
Yeah.
in Kenya? Yeah. You just need a cell phone, you have a bank account.
Right. You
Right.
got
Talk to these folks afterwards. Over here now.
Real quick question, kind of off of what he was saying. So for young people and for recent graduates, this is really exciting technology. And we've talked a little bit about valuation and a little bit about pricing. And one thing that I'm curious is how you all might suggest we incorporate this, blockchain currencies into our personal investments as a way to grow wealth, be involved, and then help disrupt these things on a broader scale.
Do you own a Bitcoin today?
I do, not much yet.
None of us up here are registered investment advisors.
Well, I don't mean, so allow me to be more clear. I don't mean as like a direct, like, do this, do that, the other thing.
So I get about probably 100 emails a day from our customers about like, what should I buy? I'm not a CF or a chartered financial planner. For resources you can look at, a really, really smart guy in the space, his name's Chris Mershka, I think. He worked for ARK Investments. He has like an entire deck on like how to value these things. He's a really, really bright guy in space. There's like mutual funds that are kind of launching for this kind of stuff as well. And then like quite literally go home and open up Excel and like try to do like a little model on this in terms of like what are adoption rates looking like. And it's like a pretty daunting task. It might take you a long time, but like it's all about what your own theory and thesis is really.
Everybody out there who's interested in the question should just like figure out one thing you don't want in your life anymore, like maybe it's that extra cup of coffee each week or something like that. Take that money and buy Bitcoin. And then after you've had that taste, explore some other crypto assets. But if you don't want to remove any of your vices, just take 5, 10, 15 bucks a week, 20 bucks a week, buy Bitcoin. Do it 52 times in a year, and you'll be experienced and probably quite happy.
I have a question for the panel. What's your predictions for the value of Bitcoin in a year?
Not answering that question. Not answering
Right, last question over here.
There's been a lot of discussion about the value and the speed of the transaction and the benefit to the miner. Okay, and the speed of the transaction, the mining itself is correlated with the speed of your processing power and the cost of your electricity. Is there in any way any advantage to location of where the miner is? Yeah. And if you could touch upon that, please.
So I can add one. So I think it's the Genesis Mining that has their operation in Iceland, because the power there is like you won't pay the power companies to use it because it's so cheap because of the hydroponic power. And then in China, like they're all set up next to a river. Like there's a really good article I can send you if you come up later.
I mean, assuming that the cost of electricity is the same, is there any value to being someone that's mining, let's say in the Midwest, because there are a lot of transactions in the Midwest between Midwesterners?
It's geographic agnostic because you can transfer anywhere.
Jurisdictionally, there might be advantages.
From a laws standpoint and tax stuff.
All right, everyone, let's thank our panel.
Good job, everybody.